Good morning. It is a pleasure to discuss an exciting topic that has the potential to offer significant benefits to investors: Canadian real estate investment trusts, commonly known as REITs. REITs have gained prominence in recent years as an attractive investment vehicle, and I am here to shed light on the benefits of investing in Canadian REITs. So, let's dive in. Firstly, what exactly is a REIT? A REIT is a company that owns, operates, or finances income-generating real estate. It can be thought of as a collective investment scheme where individual investors pool their resources to invest in a diversified portfolio of real estate assets. These assets can include commercial properties such as office buildings, shopping malls, hotels, and residential properties. One of the key benefits of investing in Canadian REITs is the potential for regular and stable income. REITs are legally obligated to distribute a significant portion of their taxable income to shareholders in the form of dividends. This characteristic makes them an attractive option for income-seeking investors, such as retirees or those looking for a passive income stream. The stable rental income generated by the underlying real estate holdings provides a reliable source of dividends. Secondly, Canadian REITs offer diversification benefits. Investing in real estate can provide a valuable hedge against inflation and market volatility. By investing in a diversified portfolio of properties across different sectors and geographical locations, investors can reduce their exposure to specific risks associated with individual properties. This diversification helps mitigate the impact of any localized economic downturn or property-specific challenges. Furthermore, Canadian REITs offer accessibility and liquidity. Unlike direct ownership of real estate, which requires substantial capital and ongoing management, investing in REITs allows individuals with limited resources to gain exposure to the real estate market. REITs are traded on stock exchanges, providing investors with the ability to buy and sell shares at market prices, thereby offering liquidity that is often lacking in direct real estate investments. Another advantage of investing in Canadian REITs is the potential for long-term capital appreciation. Real estate has historically demonstrated strong returns over time. As the underlying properties owned by REITs appreciate in value, the net asset value of the REITs tends to increase, providing potential capital gains to investors. Additionally, as the population and economy grow, demand for real estate tends to rise, leading to potential increases in rental income and property values. Moreover, Canadian REITs benefit from favorable tax treatment. In Canada, REITs are not subject to corporate income tax if they distribute at least 90% of their taxable income to shareholders. This tax advantage allows REITs to retain more income for distribution to investors, enhancing the potential for higher dividends and total returns. Lastly, investing in Canadian REITs promotes economic development and job creation. The real estate sector is a vital contributor to the Canadian economy, and by investing in REITs, individuals indirectly support the growth and development of the real estate industry. REITs often undertake new development projects, which create jobs and stimulate economic activity in the local communities where these projects are located. In conclusion, investing in Canadian REITs offers a range of benefits that make them an attractive option for investors. The potential for stable income, diversification, liquidity, long-term capital appreciation, favorable tax treatment, and the ability to support economic growth are compelling reasons to consider adding Canadian REITs to an investment portfolio. However, it's important to conduct thorough research, assess risk profiles, and consult with financial professionals before making any investment decisions. Like any investment, REITs come with their own set of risks and considerations, such as interest rate fluctuations, property market cycles, and regulatory changes. Thank you for your attention, and I hope this speech has provided valuable insights into the benefits of investing in Canadian REITs. Remember, prudent investing requires careful analysis and thoughtful decision-making. Happy investing! I can give you an overview of 5 prominent Canadian REITs. I recommend verifying this information with up-to-date sources for the latest financial histories. Here are 5 Canadian REITs that were well established at this time. RioCan Real Estate Investment Trust, REI.UN. RioCan is one of Canada's largest REITs and focuses on owning, developing, and managing retail properties. It had a strong financial history, with a diverse portfolio across Canada. It had been generating consistent rental income and had a solid occupancy rate. Allied Properties Real Estate Investment Trust, AP.UN. Allied Properties specializes in urban office properties in major Canadian cities, primarily in Toronto, Montreal, and Vancouver. It had a history of stable cash flows and a strategy focused on acquiring and managing properties in vibrant urban locations. SmartCentres Real Estate Investment Trust, SRU.UN. SmartCentres is known for its portfolio of shopping centres and mixed-use developments across Canada. It had a history of long-term leases with national retailers, providing stable income. The company also had a development pipeline for future growth. HNR Real Estate Investment Trust, HR.UN. HNR RIT has a diversified portfolio consisting of office, retail, and industrial properties across Canada and the United States. It had a history of stable income streams and a well-managed portfolio. Choice Properties Real Estate Investment Trust, CHP.UN. Choice Properties primarily focuses on retail properties anchored by Loblaw Companies Limited, one of Canada's largest retailers. It had a stable financial history and benefited from a strong anchor tenant. Canadian Apartment Properties Real Estate Investment Trust, CR.UN. Known as CAPREIT, this REIT focuses on residential properties, primarily multi-unit residential buildings. It had a diverse portfolio across major Canadian cities and had shown consistent growth in rental income. Northwest Healthcare Properties Real Estate Investment Trust, NWH.UN. Northwest Healthcare Properties REIT specializes in healthcare real estate, including medical office buildings and clinics. It had a portfolio of properties in Canada, Brazil, Germany, Australia, and New Zealand. First Capital Real Estate Investment Trust, FCR.UN. First Capital REIT focuses on owning and developing retail and mixed-use properties located in urban areas. It had a strong presence in major Canadian cities and aimed to create long-term value for its unitholders. Dream Office Real Estate Investment Trust, D.UN. Dream Office REIT owns and operates a portfolio of office properties primarily located in urban areas of Canada. It had a diverse tenant base and aimed to maximize income and long-term value for its unitholders. Artis Real Estate Investment Trust, AX.UN. Artis REIT owns and operates a diversified portfolio of office, retail, and industrial properties across Canada and the United States. It aimed to generate stable cash flows and deliver sustainable long-term value.